today's video, we review a trade from one of our pro members. Could anything have been done differently? Let's see what John and team come up with. Listen up. For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
What I'm thinking technically here is I'm essentially thinking that we got a breakdown from a topping pattern. If I set in a price pattern target to my topping pattern, it puts me at around 1630. I have previous swing lows around 1630, 1640, 1650-ish, right? I have to consider the 1630 area a highly probable range for the market going into the future, right? So there's a couple things we want to consider. Direction's one of them. Also, where's the move going to be in so many days to expiration, whatever your trade is? And am I going to be in the profit zone? And what's the path it's going to take to get there? And to me, this looks like it could reverse early, because this one reversed literally down here in around 1700. But I'd expect a minimal move to this price pattern target, which would be here of around 1700. These swing lows with a fairly high probability of hitting 1630. That's what I'm thinking. We may also get a bit of a bounce here and then a reversal down. We can get, that would also be very probable, right? Because we're in the downside of the zone. And then if we get a snap and crack reversal and it bumps back in, I would expect a very aggressive up move. So my point being is I'm not really expecting the market to just sit here and consolidate at this level. Could happen. I just don't think that's a high probability move. Okay, so with that in mind, if I'm looking at this trade here, this is what we have for an entry. I believe we're over maximum negative delta on entry. So he's kind of expecting a down move, but again, to where and so forth. If I'm looking at a trade like this and I don't have any reference for the adjustment guidelines, so I can't really comment on those. All I can do is comment on the entry. And if I was entering a trade like this, what I do is I play it out in my head. So I'm thinking this trader is expecting a bit of a down move, probably to, maybe 1730s, maybe 1710. It's reasonable. And then a bounce and a consolidation in this range for a long period of time, or a bounce and a mild move up. So if the trade technicals or the trade situation is, hey, I'm going to go to 1700, 1710 and bounce, if that's playing out, then I expect it to range. My trade plan in that case would be, if the market comes down and bounces, I'm out with a break of that area, because the break of that area tells me I'm coming down into here, and down into here isn't good. I know that this is a highly probable move, and that being a highly probable move, am I willing to take, like I said, I don't know what the exit loss trigger was or how much he was willing to risk, but am I willing to take a drawdown if I go to 1940, and I exceed that by 20 points? Am I willing to take a $2,000 drawdown? If the answer is no, and I have to make an adjustment to this, and my adjustment process is to put it flat delta, that's a losing trade. Because if the market comes down here, it's going to reverse really hard. And if I'm flat delta there, I'm going to lose to the upside, right? So that's not a good scenario coming up, right? So I know that scenario, I'm considering this before I even enter the trade. If that scenario plays out, this trade loses. If the scenario plays out where I come down, where I get a snap and crack reversal and it just goes up, this trade loses. So there's the only scenario under which this trade wins that I see is either we just hold this range really tight for a long period of time, or we get to pull back to 1700 and hold range, or we can pull back to 1700 and then he has some sort of an aggressive up strategy. Adjustment to the upside. Those are the only winning scenarios.
That's such a great framework you just laid on that. Let me just take this, overlay it with what the technicals are saying, and then just play out the trade. I don't need to click through every single day and see. I kind of know. And to your point, the structure doesn't match the price action is the takeaway, right? So,
Well,
you know,
that's the other point too, right? Because if you take a look at the price and where it's willing to go, I see this as
Yeah,
a forced trade. By forced trade, I mean I have to trade
yeah.
something, and I have to make
and
a
this thing
subjective
is just
guess.
simply,
Go ahead.
yeah, I mean, we're total agreement. So sorry to step on you there a little bit, but it's just kind of,
No, that's fine.
I just think I spent several hours looking at both of these trades, and it's amazing how much you can really learn, but just simple price action. We were at the top of a major high time frame range. The assumption when that starts to break down from there,
Right. The range being this, I'll
yeah,
throw this out here just so you have it.
yeah,
But
exactly.
when he says top of the
Exactly.
range, he means basically.
Yeah, so we're at the
right?
top of that. When that starts to roll back over, your expectation should be number one, halfway of the larger range. And this is where we're at.
Which is
Yeah.
going to be here. Let me put that in. Edit properties. I think this is number 2. Nope, it's number 1.
Or you could just measure the range. Yeah, they'll do a new one and measure the range and see where the half is.
Right, or whatever,
Yeah,
but it's basically right here, right? So
yeah,
we'll put that
exactly.
in like green.
So we're kind
Oh,
of
okay.
we're kind of at the half
Yeah,
now,
I have to
and we're
expect it to move to
breaking
here.
down. But my larger point is just to kind of pull back and really get the narrative context right. When you're at the top of a range and that starts to fail, the first expectation is the halfway point. The next expectation is to traverse the entire range, which is to say back down to right where John has his cursor, maybe the 1710, but the 1630. So if that's my expectation, I don't want to be in a range bound configuration, which is M34U. I want to be more directional. I did a lot of this in 2022, what I call destination trading. I would have set a butterfly down there at the 1650, see if I can catch it.
Yeah,
right.
like
It's not
down
going
in
to
here.
cost me anything. If I'm wrong, I can lift the expiration graph really easily. So matching configuration with what's happening in the price action is kind of step one. So, I don't know what your thought would have been, John, but I would have just thrown on some super bears, see if we can get it to come on down into range, and then do some conversions at the bottom of the range to see if we can get to reversal to go the other way.
Yeah. I mean, I'll show you what I'll
Yeah.
show you what I was thinking in a minute. But before that, I just want to go through this
Mhm.
trade, right? The way that it was. So let's just go to like adjustment 1, okay? And we'll see, what did he do? So he's already adjusting to the upside, right? So the asset price is at 1800. He's already adjusting to the upside, and what is it? 1800. It must be okay. Let me go a couple days here. So we get a bounce. It comes down, and we get a bounce. So we're up in the 1800. He's making an adjustment up, and look at what's going on technically. This is bearish, right? This is a retest of a substantial breakdown area. And we haven't even reached it yet. So he's already shifting more bullish in the trade when realistically we should be probably aiming this more bearish, if anything, if I wanted to do anything with it.
Yeah, that just so he
And then go ahead.
Kind of have a sense of what his thought was is we were trading down into a supply zone. If you look at the left, like back in April and May. So he's thinking,
Right.
well, that's where it's going to stop. But again, if
zone
you're
right
thinking
there.
yeah, exactly.
Right.
If you're thinking in terms of really zoom out, we're at the top of that big range, which was 2000, 1990. It just, I mean, I mean, I totally see what he's talking about. He's thinking, okay, the market's going to come down into there and then range out. And so that's why I'm doing an M34U. But you're under all the moving averages. You're making higher, lower highs, lower lows, lower highs. You've got to be thinking more. It's going to trend to the halfway point of range and bottom of range rather than, oh, it's going to hit that yellow box and go sideways. I mean, it certainly could have done that, but.
Well, right. And like I said, this is really the only scenario he wins.
Right.
If it does this again, which
Yeah,
maybe you're planning for that, right? Maybe,
No.
and I'm not criticizing that.
Yeah,
If that was a
exactly.
trade plan, it was wonderful, right? Right. But you're out when you break the low range.
Yeah.
You have to be.
Yeah.
Trade's done. Right. So, which may be at a loss, may not be at a loss. Okay. So next adjustment here is, okay, so another up adjustment here on the 28th. So we had another up adjustment on the 28th, 26, 27, 28. Did we break a new high on the 28th? Okay, yeah, that's another up adjustment on the 28th here, right? So it's adjusting up, and in an area where technically, am I in the right? Am I even in the right year? I have a problem sometimes being in the wrong place. Yeah, so that is really no reason again to adjust up in that time frame. Let's go. But now you're taking on more downside risk when the market's likely to go down. Then we get into this situation here, and he does a delta flattening. Where are we on October 3rd? I'm just curious technically because I haven't really looked. So October 3rd, 1, 2, oh, we're right here. Yeah, so we're in his zone where, say, he thought it was going to bounce, right? Well, I don't know that,
Yep.
but I'm just guessing, right? So if I'm in the zone, I thought I'm going to bounce. I don't want to be flat.
Yeah, right. Yeah.
Right. If that's my opinion, I don't want to be flattening here. I just want to exit if I drop down. So here is where we are. And then next adjustment is, and oh, okay. Let me go to the next one. All right. So then I get a bounce and I'm back here on the, let's see, on the 10th, where we sit on the 10th. I'm gonna get back into here. Again, I'm having a lower high so far. Market action is still bearish. I mean, you can argue I broke the swing low, but I didn't break downtrend line here. Primary downtrend line. I really didn't break even my secondary steeper downtrend line. There's no reason here I see necessarily to reverse the trade and go bullish again. That's what happened, right? He went bullish there. Bullish adjustment. Yeah, he went back bullish adjustment. This is fine. I mean, I don't like the bullish adjustment necessarily because I don't have a reason to do that. Unless, of course, I'm very bullish there. So let's discuss that. So, okay, I hit the bottom. Now I want to aggressively adjust up because we made this bounce and I believe we're going to go higher. Okay, fine. Pick a control point to the downside that tells you you're out, right? And I'd almost even maybe pick this swing low, maybe something a little bit lower than that. But certainly, if we break the swing low here, again, another lower high, right? So this did come out as a lower high. This came out, and realistically, this day we break swing low, probably going down, and we do. And then, of course, we come down into our primary zone here, and this is where the reversal takes place. So I guess my thoughts are this was a hard trade to win with any high probability unless something very specific happened in the market. And I generally don't like to set up that way.
Yeah.
I'll show you what I did or what I thought. So I had no context on what he's thinking, but with what I'm thinking, maybe I want to take a bullish bet here on the marketplace for whatever reason. My question becomes, how much is this going to draw down because he mentioned 1650 in his notes. We blow right past 1650 on October. So that's, I think, where he exited the trade, 1650
Right.
with his exit point. So if I was really bullish here and I'm looking at 1650 at an exit point, and my drawdown is 1500, and let's say I blow past that by 20 or 30 points, which is really easy to do. Realistically, if my plan is to do nothing here, which would have been a good trade, by the way, right? If my plan was to do nothing here, then I'd draw down about $1,900. So if I'm saying I want to draw down $1,900, I want to have the potential to make $2,000, I'd probably just enter the trade something like this. Let's see if I can go. Right, I could enter the market something like this. This gives me now, if I go to 1650, I'm only down 500 and something dollars. Again, I'm planning for the down move and I'm planning for the stall. Right, so I have the same stall plan. I only have $1,000 at risk. I could potentially make right here. I can do this more contracts if I want to, but I could potentially make, $1,400-$1,500 here. So with that in mind, I don't really need to do anything. I can let the 1650 play out.
Yeah, I just want to point out that
Go ahead, Stephen.
I don't know what the right word is. How clever, smart. How much risk you have in the trade? $1,100. The original trade had 4,300. So not only is John gaining range and playing for two potential scenarios, a stall and a down move that he can survive, he didn't have any risk in the trade. Huge.
I don't have very much risk, right? And very huge. And the other thing too is that I don't trade based on how much I want to make. I trade based on how much I'm willing to draw down.
Good point.
Right. So if I know, if I have my expectations and I know that, hey, it's pretty probable I come down to here, it's fairly probable I stall here. Now, this isn't going to be good for the up move unless I decide to adjust aggressively up, which I would do if we broke that level that we talked about, right, to the upside. But the market never does that. So this trade, we'll just kind of go over what this looks like. Run it down here. So there's basically, hold on a second. Let me see what I have for movements here. I don't have anything till 10-3, right? So there's basically no adjustments here. So I come in here at 922. Also notice how much easier to manage this is. So I don't do anything until 10-3. So let me go to 10-3 and we'll talk about, let's go to 10-2. So the market's basically been here and we're in this range and it's up $81. I go to 10-3. This must be a breakdown maybe. Right, the trade breaks down underneath my backside. So I'm like, okay, this is in good shape. I do this for an adjustment. So let me see where exactly I went. Yeah, so I just did a butterfly. So -1 +2. Let's see, this is 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. I take out my downside risk and my upside risk, and I actually increase my profit potential with the down adjustment. I'm still biased to the upside. I'm still aware that we might go down to 1650, but now my pullback to 1650 is only a drawdown of, say, $300 or $400.
Yeah, and I just got to continue to highlight it. And your downside risk comes out. You're increasing the tent height, so opportunity, and decreasing downside risk. That is just talk about stacking the odds in your favor. I want people to really study that.
Right.
Oh, go ahead.
I'm actually right. Yeah, no, actually, yeah, no. In this case here, I actually ended up decreasing delta a little bit, but sometimes this will actually increase delta, but I don't really care because my total risk
and
is down.
that's something I want people to really try to focus on. Like, if you can increase opportunity and decrease downside risk in this particular situation, that's you're stacking those odds in your favor. You think about those tactics.
Exactly. We continue to go down. Let's see what happens over the next few days here. I think we're just sitting. But this trade at no point ever got into any real trouble. but let's just go to next. Well, let's just go to the bounce that we had, I guess, which was, I guess this was the maximum bounce, right? So up 127. Then, right, so then things start falling apart. So let me go to this here. So what happened here? Oh, I start pushing out the backside of my tent. I start getting into trouble. Let's do the same thing. I bring this down. I actually pulled it past here. And what we did is we brought our total risk down to $700. And let me just do, I'll show you the adjustment so that it's easier here. So it's just a condor order, -1, +1, and -1. Right, so I did this order. So now I take my total risk down to $600. I still have a chance to make, decent chance to make like $1,000 here or whatever. And my upside risk, even if I blow off to the upside, is only $200 down, right? So very safe move there. So this is a similar tactic. Oops. Okay, let me clear. Let me go to, we got a bounce. Go to the top of our next bounce, and then of course we get, the market continues to go down. Here, I kind of do the same thing. I bring this down. Now, I'm starting to get hurt now, right? Because this is going maybe a little bit further than I'd like. Because, now I'm bringing my short strike all the way below. But now my risk in my trades, only 362. I still have a chance to make a decent amount. If this reverses and goes forever to the upside, I don't lose any money now. Right? I don't lose any money now. Then if I go to next day, we're at 1680. I did the same thing. I just continued to roll down my lower wing. Now this is starting to hurt, right? Because I had 2,000 before, now I'm at 1,200. But maybe things aren't going as well as I would like. Maybe I wasn't expecting the move to come down this far, but I'm still bullish, right? So if you look at our chart patterns, I'm still bullish off this 1650 level. I just want to be able to survive this move until the market actually bounces. And I am expecting the bounce. So I don't want to flatten my position. If anything, I want to hold a very strong positive delta, and I don't want risk to the upside. Goes down, right? And now we get to the point where we're starting to leave it. Because my structure is just, actually, I actually did one more time. So one more time here. What did I do? Did I do right? I just did a butterfly, a 1-2-1 butterfly. And now we're into this. So now my total risk to the downside is $200. I get a reversal. I'm up 3. If I get just the right thing happens, I'm in the, $800,000 range, which this is a trade that's gone bad, but in my opinion. But okay, so we come down here. It looks like I might be, realizing that risk possibly. We're at 1852. At some point you want to stop, right? And this is where we want to stop. We just don't want to do anything here. We just want to wait this out. Let me pull back into here. And I would consider this trade 90% of the time a goner. But this is where we talk about leave yourself an opportunity to win, because I don't know what's going to happen here. Right? But I'm only down $170 if this is a loser. And then we have, the big reversal. And, there is luck in play here, but you do get lucky sometimes, right? So now I'm back to this level here. Do I want to just exit this at a scratch, or do I want to let it play out? And, from here, you might be thinking you want to maybe do a little bit of intraday type of stuff in here. You can see how this plays out. Early in the morning, I did an adjustment here. What happened is the market shot up in past my level. So we're at 476. I pulled this down, right? So you can see I pulled both sides in. So I pull both sides in. Now I have a $50 risk to the downside. If it goes up 400, if it goes up, I win 450. If it pulls back into here or holds this really tight range, then maybe I'll make a little bit more. And oops, I don't want to go to a day. But basically, if you play this the day, let's go 45 minutes at a time. You can kind of see where the price action went. If this had pulled back at the right time, and I can let that happen, but if that had pulled back at the right time, then that's because go back here. Shoot.
Fine.
Sometimes the software gets to me, Steven. Okay. Let's see here. 42. Yeah. So, I mean, we end up taking a $450 gain on that type of a trade. But those are the type of tactics and techniques that you can use if those are your thoughts.